Most people think you need luck, a big paycheck, or some secret connection to grow money fast, but I turned just $500 into $5 and using a strategy anyone can copy. No gambling, no crypto hype, no get-rich-quick scams. And what I discovered shocked me, because the real wealth wasn't in the $5 it was in the system I built to make it happen. If you've ever felt like you're stuck with limited money and limited opportunities, listen closely. This is the exact step-by-step approach that completely changed my financial life. And it all started with less than the price of a new phone. Most people never realize how much control they actually have over their financial future because they grow up believing that money is something earned only through labor, hours, and physical effort. They are taught to chase higher salaries, climb corporate ladders, and trade more of their time for marginally more income. But the truth becomes very clear the moment you observe how wealth is actually built in the real world. A job always has an income limit, while investments have no ceiling. Every job, no matter how prestigious, ties your income to your time, and since your time is limited, so is your earning potential. The moment you understand this, you stop seeing money as something you chase and begin seeing it as something you grow. When you rely solely on your job, you're relying on a system that is fundamentally capped. You can work harder, you can take on extra tasks, you can negotiate for a raise, but at the end of the day, the structure will never allow you true financial expansion. It's designed to pay you enough to keep you there, but not enough to give you freedom. You become dependent on the hours you can physically work, and because you only have so many hours in a day, your income is chained to your availability. This is why many people feel stuck even when they earn more than they used to. The job grows a little, their expenses grow a little, and the gap never widens enough to create stability or wealth. Investments, on the other hand, follow a completely different logic. They grow independently of your time. They work even when you don't. They multiply while you sleep, while you relax, while you engage in other projects, or while you spend time with the people you care about most. When you invest, you shift from being the engine of your income to being the architect of it. And the moment money starts working harder than you do, you experience the kind of freedom a job can never provide. Your money becomes an employee that never calls in sick, never takes breaks, never complains, and never demands overtime pay. It simply continues growing in the background. The beauty of investments is that they don't require large amounts of money to begin with. They require understanding. They require patience. They require consistency. When people say they don't invest because they don't have enough money, what they're really saying is they've never taken the time to learn how investing actually works. A small amount invested intelligently can grow far more rapidly than a large salary saved poorly. Someone investing $100 monthly with discipline will often beat someone making 5 times more but doing nothing with their money. Investing is not just about money. It's about mindset. It's about seeing the long-term path when everyone else is focused on the next paycheck. The biggest shift happens when you stop relying on income that ends the moment you stop working and instead focus on income that continues regardless of your effort. This is why investments are powerful. They compound. Every dollar invested has the potential to give birth to more dollars, and those dollars can continue growing without requiring your presence. Compounding is a silent, invisible force that doesn't seem impressive at first. It moves slowly, almost unnoticeably, like a seed buried underground. But with time, consistency, and proper care, that seed grows roots, strengthens its base, and eventually becomes something massive, something you could never build with your hands alone. A job gives you money for the day. Investments give you money for the future. When someone says they turned a small amount of money into something meaningful, it's rarely because they found a magical opportunity. It's because they understood the simple truth that small money becomes big money when multiplied over time. If you take $100 from your paycheck and spend it, it's gone forever. But if you invest it into a scalable opportunity, whether that's flipping assets, building digital products, buying shares, or creating systems, you allow that money to become productive. You give it a role. You give it a purpose. You turn it into something bigger than itself. This is why people who understand investing never think small, even if their starting capital is small. They see every dollar as a worker with potential. They understand that a dollar invested becomes a dollar with a job, a dollar with the ability to bring home more. And when you start thinking this way, your financial life changes rapidly. You stop chasing consumption and start chasing multiplication. You stop asking how to earn more per hour and start asking how to earn without hours. You stop dreaming of raises and start dreaming of assets. Investing also forces you to become a better thinker. You begin to evaluate risks differently. You learn to delay gratification. You develop patience, emotional control, and long-term vision. These are traits that spill into every other aspect of life, making you more strategic, more intentional, and more aware of opportunity. When you invest wisely, you begin to see opportunities that salaried thinking never reveals. You begin to understand why wealthy people focus on ownership, not labor. They don't try to earn more hours, they try to earn more assets. They don't try to work harder, they try to make smarter decisions. A job can give you stability, but investments give you possibility. A job can pay your bills, but investments can build your future. A job can make you comfortable temporarily, but investments can make you free permanently. The moment you experience money coming in without needing to physically work for it, even if the amount is small, you feel something shift inside you. You begin to understand that your life is not limited to your salary. You begin to understand that wealth is not just for the lucky, it's for the intentional. Investing isn't just about making money, it's about regaining control. It's about taking your financial power back from the hands of employers and putting it into your own hands. It's about creating a life where you can choose how you spend your time instead of selling it to survive. It's about ensuring that your family has security, that you have options, and that your future is not defined by your job title. When you choose to invest, you choose expansion over limitation. You choose growth over stagnation. You choose a life built around freedom rather than obligation. And once you see what your money is capable of when it's given the chance to grow, you will never look at your paycheck the same way again. Most people underestimate how powerful flipping undervalued items can be because they're too focused on glamorous investment opportunities instead of simple, proven strategies that actually multiply small amounts of money. They think investing is only about stocks or real estate or complicated financial systems they don't understand. But the truth is that flipping undervalued items is one of the fastest ways to turn small capital into real, tangible profit because it relies more on awareness and effort than deep pockets or advanced knowledge. When I first started with flipping, I wasn't searching for a miracle. I wasn't chasing quick riches. I was looking for a way to make my small amount of money move. And the moment I realized how undervalued certain items are simply because people don't want to deal with them, everything changed. The flipping opportunity exists because most people want convenience, not maximum value. When someone is moving, downsizing, cleaning out their garage, or simply wanting new furniture, they often list perfectly usable items at extremely low prices just to get rid of them quickly. They aren't interested in researching market value or negotiating or taking better photos. They want the item gone. But on the other side of the market, there are buyers who want those exact same items, and they're willing to pay significantly more for them. This gap between seller urgency and buyer demand is where flipping becomes a powerful income generator. You're not tricking anyone, you're not exploiting anyone. You're simply recognizing value where others don't. Flipping teaches you something fundamental about wealth. Opportunities are everywhere. But most people walk past them because they assume anything simple can't be profitable. This assumption is exactly why so many people stay stuck. They want something big, something dramatic, something that feels like a once-in-a-lifetime breakthrough. But wealth rarely begins with big moves. It starts with small, consistent, repeatable actions that build momentum. Every major business in the world began by identifying demand and serving it. Flipping is the exact same principle, just on a smaller, more accessible scale. It's the rawest form of entrepreneurship, and it forces you to learn real market skills that translate into any business you pursue later. When you flip undervalued items, you learn how to negotiate without fear, how to spot deals instantly, how to judge quality, how to read demand, and how to evaluate risks. You start to understand what people actually want, not what you think they want. You learn how to talk to sellers, how to talk to buyers, how to list items with descriptions that attract attention, how to take photos that make a $30 item look like it's worth 100. These are skills that no job will ever teach you, yet they're skills that can be used for life. When I flipped my first item, it wasn't the profit that changed me. It was the realization that I had the ability to produce money without relying on an employer. The more I flipped, the more patterns I began to notice. Items most people ignore became my silent income streams. Chairs, shelves, monitors, lamps, coffee tables, small appliances, outdoor furniture, fitness equipment. People were practically giving these things away because they didn't have time to deal with them. But buyers, they weren't in a rush. They wanted quality. They wanted something that looked new. They wanted a fair price. And I became the bridge between supply and demand. In a world where everyone wants things instantly, the person willing to spend a little extra time cleaning, fixing, photographing, and listing can earn more than someone who works an entire shift for their employer. What surprised me most was how quickly the returns added up. When you flip consistently, your money moves fast. You buy something in the morning, clean it up in the afternoon, list it in the evening, and sometimes sell it by the next day. The speed at which capital rotates is something you don't get from traditional investments. Stocks require time. Real estate requires larger capital. Businesses require setup, but flipping, it requires willingness. Willingness to look, to negotiate, to move items, to create listings, to communicate. And because flipping relies on your effort rather than money, your returns are often higher than anything you can get in the financial markets with the same initial investment. Most people fail at flipping not because it doesn't work, but because they approach it with the wrong mindset. They expect huge profits instantly. They want every flip to be dramatic. They get discouraged if something doesn't sell immediately. But flipping works on volume and consistency, not miracles. A dare 20 profit here, a 40 profit there, a 6 die profit after that. These small wins begin stacking until your initial money multiplies. And because you reinvest your profits into more inventory, your money grows exponentially. The first time I turned 25 into 85, I felt the potential. But the 10th time, that's when I understood the power. That's when I realized this wasn't just a side activity. It was a legitimate system. Flipping forces you to think like an investor, even if you don't realize it. You're constantly evaluating risk and reward. You're analyzing supply and demand. You're determining whether an item is worth your time, whether it will sell quickly, whether it has flaws you can fix cheaply, whether you can increase its perceived value with simple improvements. You start to see hidden opportunities everywhere, not just in items, but in conversations, in markets, in behaviors. Flipping doesn't just make you money. It changes the way you think, and that change in thinking is far more valuable than the profit itself. The best part is that flipping doesn't trap you in a cycle the way a job does. Your income is not limited by your hours. You can flip 1 item per week or 10 per day. You can grow slowly or aggressively. You can scale by adding high-value items, partnering with others, or branching into new categories. You control the pace, the risk, and the scale. And once you build a base of profit from flipping, you can use that money to invest in other things that multiply even faster. Digital products, skills, content, stocks, tools, or new business models. Flipping teaches you one of the most important principles in wealth building. Money grows when you move it intelligently, not when you hoard it. Every flip is a small experiment, a small risk, a small step forward. But each step builds confidence. Each win builds momentum. Each profit builds capital. And once you understand that you can take something undervalued and turn it into something valuable, you start seeing yourself the same way. You begin to understand that you too can be transformed by effort, consistency, and intention. Flipping undervalued items isn't just a side hustle. It's training. It's the foundation of resourcefulness, the proof that small beginnings can lead to big outcomes, and the evidence that your income doesn't have to depend on your job. You learn that wealth doesn't come from waiting. It comes from moving. It comes from acting, observing, adjusting, improving, and repeating. When you realize that every item sitting in someone's garage, storage, or basement is a potential stream of income for you, you stop feeling limited. You stop feeling powerless. You begin to see opportunity everywhere. And once you see it, you can't unsee it. When I first realized that leverage wasn't just about using borrowed money, but also about multiplying the impact of every decision I made, everything shifted. Most people think leverage is some mysterious, high-risk tactic reserved for hedge funds or bankers in suits who speak a language the rest of the world doesn't understand. But the truth is that leverage shows up everywhere, even in places we overlook because it feels too normal, too accessible, too simple to matter. The real power lies in understanding how to stack tiny advantages on top of one another until the final result looks like a massive breakthrough rather than the sum of small, repeating choices. One of the most important truths about leverage is that it starts with knowledge. Information, real, applicable, current information, is the most powerful form of leverage because it compounds without needing money. The moment I stopped trying to guess and instead started learning from people who were already doing what I wanted, my outcomes changed. I didn't need to reinvent the wheel. I needed to watch how someone else pushed it faster. Every strategy I used to turn 500 into $5,000 was already being used by thousands of people online. But while most people skim advice, I treated it like instruction. That alone was leverage. Someone else's 10 years became my 10 hours. Someone else's mistakes became my shortcuts. That meant every move I made had 10 times the accuracy, 10 times the clarity, and 10 times the return. But knowledge alone isn't leverage unless it's paired with speed. Speed is one of the most underrated assets in wealth building. Not rushing, but moving quickly with intention. Every time I learned something, I implemented it instantly. I didn't wait for the perfect moment, the perfect skill set, or the perfect confidence. Acting fast doesn't mean acting recklessly. It means eliminating hesitation, which is the biggest tax on opportunity. The faster I moved, the more cycles I completed. A cycle could be testing a product, adjusting a price, posting a piece of content, or launching a small ad. Each cycle taught me something new, and every lesson compounded. While most people were still thinking about their first move, I was already on my 10th refinement. That speed became leverage because I collected data and experience at a rate that was impossible to compete with unless someone else matched my urgency. Another major form of leverage is platforms. When I chose to sell digital products, for example, I wasn't just selling a file. I was leveraging the distribution power of marketplaces, algorithms, and search engines that had millions of users built in. I didn't need to beg for attention. The platform delivered it to me because I aligned my offers with what people were already looking for. This is something most people never realize. You don't need to build an audience from scratch to make money online. You can tap into audiences that already exist. Etsy had millions of daily shoppers. Fiverr had millions of people needing services. TikTok had billions of viewers. These platforms are digital megaphones. The second you upload something, you're plugging into a system far larger than anything you could create on your own. That is pure leverage, using someone else's infrastructure to multiply your output. Then there's automation, which became one of the most liberating forms of leverage I discovered. Automating repetitive tasks meant I wasn't trading hours for dollars. If a task could be repeated, I found a tool, a template, or a system that could do it for me. Whether it was automated delivery of digital files, automated responses to customers, or template-based content creation, I removed friction from every step. People assume automation is complicated or expensive, but most of the tools I used were free or extremely cheap. The real skill isn't coding. It's identifying the steps that drain your time and replacing them with systems that never get tired, never procrastinate, and never forget. Once automation handled the boring work, my time became leverage. Every hour I freed up could be reinvested into strategy, creativity, and scaling, which produced returns far greater than the minutes I saved. Another layer of leverage came from reinvesting. The $5,000 result wasn't magic. It was reinvestment compounding. Every time I made money, I asked myself one question: how can this money work harder than I can? A portion went into improving tools. A portion went into ads. A portion went into better designs, better templates, better delivery systems. Every reinvestment multiplied the next outcome. This wasn't about spending. It was about building a machine where each dollar was an employee with a job. Once they started working for me, my output increased without me increasing my effort. That's when the shift happened. I wasn't grinding for every dollar anymore. The system itself was generating momentum. And momentum is one of the strongest forms of leverage, because once it starts rolling, it becomes difficult to stop. Partnerships and outsourcing were another breakthrough. I realized there were areas where my skill ceiling limited my results. Instead of trying to become good at everything, I outsourced tasks to people who were already specialists. If someone could do a task in an hour that would take me 4 hours, paying them was leverage. It bought me 3 extra hours to focus on growth. It bought me expertise. It bought me acceleration. Outsourcing is often misunderstood as a luxury, but in reality, it's a multiplier. You're borrowing someone else's talent, time, and experience to expand your reach. That's leverage in its purest form, expanding your output without increasing your personal burden. One of the most subtle yet impactful forms of leverage I discovered was storytelling. Whenever I shared my progress online, wins, losses, experiments, it attracted an audience naturally. Not because I was trying to become an influencer, but because transparency resonates. Every piece of content I posted became an asset that lived forever. A short video I made in 2 minutes could earn views for months. A post explaining a simple strategy could lead someone to discover my products long after I forgot I even published it. Content is leverage because it scales infinitely. You do the work once, and it produces returns autonomously. And the more honest and specific the content was, the more it built trust, which converted viewers into buyers. I didn't need millions of followers. I needed the right people, reached at the right moment with the right value. The last and most overlooked form of leverage was consistency. Consistency doesn't sound exciting, but it is the master key that unlocks every other form of leverage. Platforms reward you for showing up. Skills compound when practiced daily. Knowledge becomes insight through repetition. Confidence grows through recurring wins. Consistency was the multiplier that made small actions snowball into large results. Even on days when I didn't feel motivated, I acted because consistency is leverage over your own future. It makes success predictable instead of accidental. By the time I turned 500 into $5 an hour, it wasn't because I found a perfect strategy. It was because I layered leverage on top of leverage. Knowledge, speed, platform systems, reinvestment, outsourcing, storytelling, and consistency all worked together. Each gave me a slight edge, and those edges multiplied until the outcome looked impressive from the outside. But on the inside, it was simply a collection of small, leveraged decisions done repeatedly with intention. If you understand leverage the same way I eventually did, you stop viewing money as something you chase and start viewing it as something you build. And once you learn to build it, scaling becomes inevitable. There comes a point when you realize that the difference between people who grow consistently and those who stay stuck is not skills, not intelligence, not even luck, but something far simpler, the ability to execute with discipline, even when the environment doesn't make it easy. Consistent execution sounds like a thrown around motivational phrase, but when you truly experience it in real life, you see that it's the backbone of every breakthrough, every financial jump, and every transformation that looks impossible from the outside. When I was turning my 500 into $1,000, the strategy mattered, but the execution mattered more. The discipline to show up repeatedly, even when results were slow or invisible, was the real engine behind the growth. At first, consistent execution feels like pushing a stalled car. You put in the effort, but nothing moves. The beginning is always the hardest because you're building momentum from zero. You're trying to break the gravitational pull of old habits, old beliefs, and old patterns. It's easy to start with excitement. It's harder to continue when excitement fades. Most people quit right after the enthusiasm dips, but this is exactly where consistent execution begins to pay dividends. Every time I pushed through that uncomfortable phase, I felt myself cross a threshold, a small improvement, a tiny insight, a bit of progress. It always showed up, but only after persistence. Those early days taught me that consistency is not about intensity. It's about doing the small things even when they feel insignificant. The repetition is what compounds, not the occasional burst of effort. One of the most surprising things I learned was that consistency builds clarity. The more I executed, the clearer everything became. At first, the path looked foggy and overwhelming. I didn't know which strategy to focus on, which direction to take, or what approach would give me the fastest results. But every action I took revealed something new. What worked, what didn't, what could be optimized, and what needed to be removed. The clarity didn't come from thinking, it came from doing. Each consistent action removed uncertainty. The strategy that eventually turned my 500 into 5s and 1000 wasn't discovered by sitting and planning. It came from constant trial, error, and correction. Consistency created the data I needed to make smart decisions. Another powerful truth about execution is that the level of your results eventually matches the level of your standards. At some point, I made a decision that I was going to treat my small online hustle with the seriousness of a real business. That mindset shift alone elevated my behavior. I stopped showing up only when I felt like it. I stopped treating my goals like optional wishes. I set standards for how I worked, how I delivered, how I communicated with customers, and how I approached growth. And something interesting happened when my standards rose. My results rose to meet them. Success didn't feel far away anymore because the behaviors aligned with what I expected from myself. Consistency is really the act of aligning your actions with the identity you want to embody. When your standards rise, inconsistency becomes uncomfortable. It feels out of alignment. That's when you know you're changing on a deeper level. One of the most transformative realizations I had was that motivation is unreliable, but systems are consistent. Everyone thinks they need to be motivated to execute, but motivation is just emotion. It fluctuates, it fades. It shifts depending on your mood, your sleep, your environment, even the weather. Systems, on the other hand, don't care how you feel. They create structure, they create flow, they create predictability. I built systems for everything I needed to do: product creation, content posting, customer responses, pricing updates, learning new skills, analyzing data, improving my listings. These systems turned tasks into habits and habits into results. I didn't need motivation anymore because the system handled the heavy lifting. What used to feel like a chore became automatic. And when your execution becomes automatic, scaling becomes effortless. But consistency is not just about doing the same thing over and over. It's also about consistently adapting. Markets shift, platforms change, audiences evolve. What works one month may not work the next. Consistent execution taught me to stay flexible because I was always engaged, always experimenting, always watching how things moved. I could pivot quickly. If a product stopped selling, I tested new ones. If a platform algorithm changed, I adjusted my posting. If competition increased, I differentiated my offer. The people who fail aren't the ones who make mistakes. They're the ones who stay rigid. Consistency made me adaptable, and adaptability is what kept me growing even when the landscape changed. One of the quiet benefits of consistent execution is confidence. Confidence doesn't come from imagining success. It comes from repeatedly proving to yourself that you can follow through. Every day I showed up, even imperfectly. The belief in my ability strengthened. Confidence is not loud. It's steady. It's the subtle certainty that you can rely on yourself. When you know you can rely on yourself, challenges don't feel intimidating anymore. You approach opportunities with decisiveness instead of hesitation. You make bold moves because the foundation beneath you is solid. Consistency gives you that inner strength, something no strategy alone can provide. Then there's the emotional resilience that consistency builds. When I was starting, setbacks hit hard. A product wouldn't sell. A listing would flop. A customer would complain. In the beginning, every tiny failure felt personal. But consistency taught me emotional detachment. I started seeing failures as data, not as identity. When something didn't work, I didn't spiral into doubt. I simply adjusted and moved on. This emotional maturity was crucial for growth. The ability to stay stable when results dip is a superpower in business. Most people collapse under emotional weight long before their strategy ever had a chance to succeed. Consistent execution strengthened me enough to keep going regardless of temporary setbacks. Eventually, something remarkable happened. Consistency created momentum. Momentum is the moment when effort starts to feel easier, when results arrive faster, when opportunities appear without being forced. It's the phase where your actions compound and produce more output than input. This is what people call overnight success, even though it's built on weeks or months of consistent execution that no one saw. Once momentum kicked in, turning 500 into 1,000 felt inevitable. Sales increased without increasing effort. Repeat customers started appearing. Referrals came in. My content attracted more attention. Everything began feeding into everything else because the foundation was finally strong enough to sustain growth. And perhaps the most important lesson consistent execution taught me is that discipline is freedom. It frees you from stress because you know you're doing the work. It frees you from doubt because you have evidence of progress. It frees you from fear because you've built capability. It frees you from stagnation because you're always moving forward. Discipline doesn't restrict your life, it expands it. The habits you build today become the opportunities you get tomorrow. In the end, consistent execution wasn't just a strategy. It became a philosophy. I realized that anyone can start, but only a few can continue. Those few are the ones who reach results that others label as luck, talent, or timing. But consistency is not luck. It's a choice. It's a commitment to show up, to act, to adapt, and to grow even when no one is watching. Once I embraced that, everything I wanted began aligning with the person I was becoming. That was the real win, bigger than the fathers and thousand, bigger than the strategy itself. It was the transformation into someone who could create success repeatedly, predictably, and sustainably. There is a moment in your financial journey when you realize that money itself isn't the most valuable asset you can grow. It's the system you build around that money. A system that keeps working even when you don't. A system that multiplies every effort you put in. A system that turns your wins into something permanent instead of temporary. When I turned 500 into 5,000, the secret wasn't just making good moves. It was reinvesting the profits into assets and platforms that continued generating returns long after the original effort was done. Reinvesting is the difference between a hustle and a wealth-building machine. A hustle pays you once. A system pays you for years. At first, reinvesting feels counterintuitive. You finally make some money, and the natural instinct is to spend it or reward yourself. But the moment you spend that early profit, you kill the compounding engine before it even starts turning. What changed everything for me was shifting my mindset from spending money to multiplying money. Every dollar became an employee whose job was to bring back more dollars. With that mindset, sudden temptations no longer mattered. What mattered was growth, leverage, and momentum. Money in my hands wasn't as valuable as money working for me. The first reinvestment I made wasn't into stocks or crypto or some complex asset. It was into myself. I realized that every dollar put into skills came back multiplied. I bought books, courses, tools, and resources that helped me learn faster and execute better. I didn't view these as expenses. They were investments into my earning power. Skills never depreciate. Skills never become obsolete. Skills never disappear in a market crash. They appreciate through use. The first time I used a skill I invested in and made 10 times the amount I spent learning it, everything clicked. A powerful shift happened. I saw how self-investment was the most profitable asset a beginner could ever buy. And it wasn't glamorous. It wasn't flashy. It was simple, consistent skill building that made my income streams more efficient, more scalable, and more valuable. The second reinvestment was into improving the processes that made me money. Every business, every hustle, every income stream has bottlenecks. The difference between staying small and scaling up is identifying those bottlenecks early and removing them through reinvestment. If something took me too long, I paid for tools that automated it. If something required too much effort, I bought systems that simplified it. If my listings didn't convert well, I reinvested into better designs, better product photos, and better marketing. Each reinvestment wasn't random, it was targeted. I reinvested exactly where the return would be highest. This is the difference between working harder and working smarter. Some people burn themselves out trying to do everything manually. Others reinvest a portion of their earnings into tools, systems, and upgrades that do the heavy lifting. Over time, the people who reinvest consistently outrun everyone who tries to save their way to growth. One of the most life-changing reinvestments was building a small audience. Even a tiny audience is a powerful asset because it gives you distribution, trust, leverage, and independence. When you have people who listen to you, follow your journey, or value your insights, money becomes a byproduct of influence. You're no longer chasing customers, customers find you. I reinvested part of my earnings into creating better content, learning how to communicate value, and showing up consistently online. That audience eventually became the foundation for selling digital products, attracting buyers, and creating opportunities that I never could have engineered manually. People underestimate how powerful an engaged audience is. They think of it as likes or views, but in reality, it's a long-term income engine. It's the ability to launch a product and instantly have people who trust you enough to buy. It's one of the most scalable, durable, and high-return assets you can build. Another crucial reinvestment was placing money into appreciating assets, things that grow in value rather than shrink. Not every dollar should stay in the hustle. Some dollars should be allocated to long-term growth engines such as index funds, dividend-paying stocks, or simple investment vehicles that steadily rise over time. These aren't flashy. They don't give you overnight gains, but they build wealth quietly, predictably, and powerfully. When I started allocating a percentage of my profits into reliable assets, I realized something important. Even if my hustle disappeared tomorrow, the money I reinvested into appreciating assets would continue to grow. That's when financial security began to feel real. Not because I had made a huge amount yet, but because I had built a system that kept building wealth with or without me. What surprises most people is how reinvesting changes your relationship with money. When every dollar becomes fuel for growth instead of an object to spend, financial decisions become simpler. You stop chasing instant gratification because the long-term payoff becomes more exciting. You stop fearing expenses because you know exactly which ones generate returns. You stop feeling stuck because reinvestment makes your progress continuous. Every reinvested dollar accelerates the journey. Every reinvested dollar pushes you further from where you started. Eventually, the momentum of reinvestment creates a snowball effect. Your hustle produces income. That income improves the hustle. The improved hustle produces more income, and that income increases your investment power. The cycle becomes self-sustaining. One of the biggest benefits of reinvesting is stability. When you build multiple layers of income, your skills, your systems, your digital assets, your audience, your investments, you become financially unbreakable. If one stream slows down, the others hold you up. If one platform changes its rules, you don't panic because you're not dependent on a single source. Reinvestment creates redundancy. Redundancy creates security. Security creates freedom. It's a chain reaction. Wealth becomes less about luck and more about structure. Another thing reinvesting taught me is patience. You don't need to rush. You don't need to force outcomes. When you have a system that compounds, your only job is to maintain it. Eventually, the math does the work for you. When I hit Father's Elosen, I realized the strategy wasn't a one-time trick. It was repeatable. It was scalable. It could be applied to any starting amount. It could be used again and again because the system was built correctly. Reinvestment wasn't just part of the strategy. It was the force that amplified it. Without reinvestment, growth would have been slow, uneven, and unpredictable. With reinvestment, the growth became a natural byproduct. In the end, the greatest lesson from reinvesting profits is this: wealth doesn't come from what you earn. It comes from what you reinvest. Anyone can make money. Very few turn that money into something permanent. That's why so many people work for decades without building wealth. They focus on earning more instead of multiplying what they already earn. The real difference between people who stay stuck and people who build long-term wealth is the discipline to reinvest. That discipline is what turned 500 into 5,000 Elosen. It's what creates compounding. It's what turns small beginnings into life-changing outcomes. And once you understand this, you never go back to the old way of thinking. You stop seeing money as something to spend and start seeing it as something to grow. At the end of the day, this entire journey taught me something far bigger than how to turn a small amount of money into a larger one. It taught me that most people aren't held back by a lack of opportunities. They're held back by a lack of belief that they can build something from nothing. I started with 500, not because I didn't want more, but because that was all I had. And that limitation became the reason I learned to think strategically, move intentionally, and build systems instead of chasing shortcuts. The truth is, anyone can do what I did. Not because it's easy, but because the real transformation has nothing to do with the amount you start with. It has everything to do with how you use it, how you reinvest it, and how committed you are to the process. If you're sitting there thinking your situation is too small, too slow, or too insignificant, Let this be a reminder that every major success story begins with a decision. Not a perfect plan, not ideal timing, not unlimited resources, just a decision to try, to learn, and to refuse to quit. Your 500 might look different. It might be 50 all or $5, or maybe it's not even money at all. Maybe it's a skill, a dream, or an idea you've been ignoring. But whatever it is, start with it. Use it. Build with it. And when the results appear, reinvest them into something that makes you grow even faster. The strategy I used isn't magic. It's repeatable. It's the same approach you can take and scale in your own way. And if there's one thing I hope you take away from everything I shared, it's that small beginnings don't define you. What defines you is how you move from where you are right now. So if you're ready to break out of the cycle that's been holding you back, if you're ready to stop waiting and start building, then this is your moment. This is your turning point. This is where the excuses end and the results begin. And if you found value in this journey and you want to learn more strategies that actually work in real life, make sure you stay connected. Share this with someone who needs that push. Because I can promise you one thing, the next steps you take from here can become the beginning of your own transformation. Start today, stay consistent, reinvest wisely, and keep pushing forward. Your future self is already thanking you for the decisions you make right now.